Hello, friends. This is Raj Sastry from Raj Option Trading. Today, let's take a look at the market and look at the beaten down stocks which are doing very well fundamentally. So, with that, first let's begin with the ETF action. From a ETF perspective, look, we got Chinese ETF here, FXI, which have done great in one single day. This big Chinese ETF here up 21%. So at this time, I say let's wait for a little pullback. It went up too fast. All these great Chinese stocks like Alibaba, JD, all went up nicely today. Almost all of the Chinese stocks went higher. S&P 500, as you can see, also did well here, up 2.2%. And for the year, we are just out of the correction territory, down 9.2%. Above, negative 10% is a correction territory. We are out of correction territory. I will look for a little bit pullback tomorrow, given Fed is done raising the rates, and they also have an aggressive language that they will raise more. So I see the stock futures are coming down. Tomorrow could be a flat to down type day here. And then you got QQQ, which is again a great ETF here. It's down 16% from 52-week high. But look, in a single day, it's done nicely here in one day. I would wait for a small pullback in this one also. As you see here, we got gold, which is a safe haven, which are done nicely. Now it's not doing great compared to the stocks because as stock market goes up, typically gold goes down because money flows out of gold. And then you got energy here. Energy also pulling back. Given stocks are going up, energy is coming down slightly. I think that's a trend for past couple of days, as you can see here. I think that will help inflation also. And then generally everything is up, as you can see here. We'll look at few names here and see what stocks we can buy. So from a stock perspective, what I've done is I've looked at all the stocks which are above 1 million shares traded today. So volume is 1 million or higher. And also I have looked at Piotrowski F score. I wanted the F score to be more than 5. That tells you these are financially stable companies and books are improving. So with that top of the list, we got IPI. It's a Interped, as you can see here. It's a small cap stock, as you see here, $784 million stock here. But look, it's down in one day 14% and 5 day 24%. And it's done great in 5 years and all the way 6 months, 1 year, and 5 years. They do have cash, as you can see here, free cash flow positive company, nice Altman Z score, nice Piotrowski F score, and they've done great, as you see here. But stock has suffered a major setback here, and it's also net margin positive company. So we could be a contrarian here and buy this company, which is fundamentally good. It's a big drop off here. Next we got here Norton Lock here. It's also a good company, but looks like they got one of their pending acquisition fell off the crack here. They did not get the approval from UK. That's why stock came tumbling down. Net margin positive company, as you can see here. Quick ratio is a little bit less, but I think this company will make it. But look, from an industry perspective, profitability is not there too much here, even though it's a positive net margin company. But at these levels, I would be a buyer of NLOC here and hold it for a while. And then you got DocuSign here. DocuSign is it's a okay company. Stock has suffered a major setback since last 2 quarters. Looks like folks are going to physical offices to sign the mortgage and paperwork. That's why the stock is coming down big time, as you can see here. I would wait for a little more pullback here. This could be a stock similar to Zoom here. With all these physical activities are again opening up here. DocuSign is suffering a little bit setback here. But if you're a very long-term holder, investor, you could buy some DocuSign as a contrarian here. And next is my favorite sector here, which is defense contractors. All the major defense contractors are down, as you can see here, because of some government contracts. I would be a buyer in some of these companies, especially with the nice net margin, like NOC here, Northrop. It's a good one. I would be a buyer of NOC here. I would be also buying Lockheed Martin, which is a great company here. I think it's a good one to buy. And also, even Even L3 Harris is also a good company with a nice 10% net margin. And then you got a few more here. As you see here, a lot of these stocks have come down nicely in one day. Look, we got a few more companies which are down here. I will be looking at to buy some of these names as they come down. So look, we got Raytheon and LDOS. Both are great companies here. I would be looking to buy some of these companies given they're doing great from a benchmark to industry perspective. And LDOS, as you can see here, it's got a nice Pietrowski F score of 8 here. That tells you it's a great company to buy at these levels here. All right, so let's look at a few more here. Oh, okay. So we got here Walgreen, as you see here, RSI is 47. This company is a turnaround company, like many of you know here. And look, it's down at these levels, down 35% for 5 years. Trying to recover out. Probably wait on this one and look at better candidates here. And keep watching the RSI levels here. I want the RSI to be lower. The lower, the better. So with that, we could look at a little bit lower RSI candidates here. Look, we got Calon Petroleum here, CPE, RSI 45. This is a very volatile company. If you can take the pain in the short term, you could buy some, and this typically bounces off nicely here. And we got a few more as you see here. I love Snap. Snap is a good one here. Stock is up nicely, 10% here. I think it's a good one to buy at these levels. I think they will do well. And look, some of these Chinese companies like Pindia had done great. Look at the performance of PDD here, 56% in one day. Wow, that's a huge uptick here. I would be careful here. I would not be buying here. And we got a few more names here. Look, Devon Energy, which is a good energy company. RSI is 42. You could buy such companies slowly, given energy is coming. Devon also came down, but I'll wait a little longer to buy this one here. And we got a few more here. J&J is one of my favorite here. J&J RSI 61. I would be waiting for a little bit pullback before I buy J&J here. Typically I love to focus on the RSI here. Look at the low RSI candidates. As an example, we got General Mills here. It's a very low RSI candidate. You could take a look at this one here and buy General Mills, which is a good company to buy and hold. It will do very well in the long run. But performance is not great, as you can see here, 23%. Given the stock is down big time, you could buy this slowly and go from there. So with that, thank you very much. Happy investing and trading. Please subscribe.